with what I said earlier, taking profits and all that, and being open to all scenarios, especially the worst case scenario, the main point I want you to take away is whenever the market is going higher, whenever it may be, do not be the investor that was there from the start of a run, anywhere from the start. Don't be that investor that was at the start and then buys and holds it up and then watches it go all the way back down. It's like getting on a train at this train station, and then you are trying to ride it from one end of the train system to the other end. That's your stop is the last one. But then when it gets to your stop, you don't get off, and you end up riding the train back all the way to where you started. You don't want to do that. You don't want to round trip your profits. Okay, that's what I want you to take away. And here's another thing to note that I really want you to sink in. You are not going to get returns like this in any other asset class. No other asset class will you have 373% returns in less than 2 years, a year and a half. No other asset class can do this for you. But in crypto, 373% is seen as nothing. It's like, oh, that's not enough. That's so little. And that is a very dangerous mind frame to be in. The fact that this is seen as not enough is crazy, because what other asset class or investment can you pull 360%, 373% returns in under 2 years? You got to think objectively. Like 370% is crazy good. That's a crazy amount of decent profit. And yes, I know that is me measuring it as if you caught the very bottoms of the FTX collapse, and maybe you didn't. But that's okay. Anywhere. This is a 285%. Next level up, 200%. We keep going up. These are still amazing. 181% from October 2023 that just passed. Even if you bought end of January, that's 93%. From January 22nd at the beginning of this year until mid-March at 74K was a 93% profit. That's unheard of anywhere else. So just a little dose of reality there. Just remember, when everyone else is saying it's not enough, oh, it's too early to take profits, just try to reel it in. Try to be as objective as you possibly can. I know it's difficult because it's crypto and everyone wants big returns because we've seen it before. So yeah, I get it. You want to hold out for those big returns, but just try to be as objective as you can. That's crazy. That's a crazy amount of profit. David asks, is identifying the weak zone based on RSI? No, that is just based on levels I mapped out. I marked down, sorry, there's a lot of lines at this point, but, we entered the range, this area. Let me draw another, I'm just going to use this. Okay, we entered this range, yes? Wow, that was ugly. Okay. Entered this range, but within this range, you can see there's this level that's marked with a lot of rejections, and then that which is separated from this half. So I just call this half the weak half and this half the stronger half. That's all. It's not based on RSI. It's just based off splitting up the range in halves based on their support and resistance levels that they've rejected off. Witchcraft. No, it's not witchcraft. You can see it. You can see it yourself. I didn't pull any witchcraft for this one. So yeah, the point is, after all that rise from FTX lows or wherever, even 2023. Okay, the point is, right now, it's kind of a dangerous area to be buying from without confirmation of further upside. Because if we do break down further, remember I just mapped out that 50% retracement, we could easily go to 44, 40K, and it's still very reasonable. And from the tops, that would be a 40% drop. Let's say 45% drop from the tops, from the top, down to the 40 or 44K level. Now, what's dangerous is if we break below this floor that I marked, this safety net rectangle box. If we break below that, then, further downside from there. But we're not there yet. I don't want, it's in the realm of possibilities, but I don't want to go too much into detail there because it hasn't happened yet. We're still quite a ways away from this. So we gotta see this first before we even look at, oh my god, where could we go from there next? But let me tell you, if we go to here, even if we go to the 382 retracement at 51K, 44K, 40K, let me tell you, if that happens, so many people are gonna wish they took profits. They're gonna wish they took profits now when they had the chance. And then here's the kicker. Here's the other kicker. When we do find a support floor and bounce back up, wherever it may be, I'm just saying if we continue seeing a decline in price here and it goes further and further and further, and wherever that support floor might be that we, reject and bounce up, those same people, when we are on the upside again, they're all going to completely forget about the possibility of a correction. And they're going to continue to buy more and more and more as prices go higher and still not take profits. Retail is really emotional and stupid. And that's why they are nicknamed dumb money. So I think like David said, in 2021, we hit 65K that first time. April 2021. People were still buying. Coinbase is public. Coinbase IPO. Oh my gosh, great news. Great news. Institutions and investors are going to buy Coinbase stock and it's going to move crypto up. And then what happened? Then we crashed 50%, 55%. And everyone that was still down here, they wished they took profit up here, right? Maybe that was you and you can relate, but I can bet you anyone who held and could have taken profit up here wished they did when we dropped down here. And then what happened? Then we reversed from this point. Reversed, right? That was the last kind of low before we headed up again. And then we got a second chance, a second run up. And this time, do you think those people learned their lesson? And took profits? Do you think they took profits anywhere here? No, they didn't. Even though they didn't take profits here, got down here, wished they did take profits here, came back up again, still didn't take profits. Again, same behavior repeated over and over again. They bought and bought and bought and bought higher and higher and higher without taking profits. Because to them, they're like, well, this time, we are really going to go up to 100K. This is it. We're going to go straight up here to 100K. Of course, it didn't happen. They never learned their lesson. And maybe it was you, maybe it wasn't you. My point is not to name and shame anyone. My point is to put all of this into perspective for you always and bring everything that's happened in the past into one digestible picture for you to learn from. You want to learn from the past. You want to learn from mistakes you did in the past, from mistakes other people did in the past. It's happened before this way. So maybe knowing that it's a possibility, what you want to do is protect your capital and protect your profits when it inevitably happens again, and it will eventually. We don't know if it's going to be this part right here. We don't know, but it is going to happen eventually. So remember, take your profits, protect your capital, protect your profits. And then the really funny part is when we do get the lows, wherever the lows may be, by that point, people are too scared to buy. When we get to the bottom of prices, people become too fearful of buying the real lows, which is why many people don't actually make money when the bull market starts, because they were too scared to buy any of these areas, any of these zones here, too scared to buy. Only happy to buy when it hits 50, 60, 70K. Basically, you make money in the bull market based on how low you bought in the bear market. And most people are too fearful at that stage in the bear market. Again, I keep going to FTX crash as an example, but it doesn't have to be the FTX crash. It could be any low. Whenever we are in the lows, at the bottoms, people are too scared to buy, too scared to commit any money at the actual lows. So they're too scared to buy down here, and then they are too scared to take profit when we're up here. It kind of sucks. People are plagued with fear from both sides. Too scared to buy, too scared to sell, and they always do the wrong thing. Too scared to do the right thing, always doing the wrong thing. So, moral of the story, if you want to play both sides the right way and not be plagued with fear, and you want to get the best of both worlds, then chapter 12. I just added it last week. Visit the scaling out lesson. That's a brand new one that I did in chapter 12 for Crypto Trading Mastery. And I go into more detail on taking profits, taking partial profits, and letting the rest of your trades or investments ride, completely risk-free. That way, when you take partial profits, if the market goes down a bit, you don't care, you're happy, because you took some profits. And if the market decides to go up after you took partial profits, without a correction or deceleration, you're still happy, because you still have some of that investment or trade running in the market. It's still engaged. You didn't sell everything. You only scaled out. So you still have some investments riding up with the market.